Middle East supplies are OPEC plus supplies. Currently, the market is oversupplied.
It's a green-looking screen across the board. All four major indices that you'll see at the top of your screen, seeing major gains as well.
The margins coming in at 23.2% as well, slightly higher than the company's own guided band of 22 to 23%.
It's a tender buyback at 1,800 rupees per share, and it accounts for 2.4% of the overall equity.
Gross margin stood at 50.9%. Almost flat year on year.
Good gains for the market. We're above the 26,000 mark right now.
That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi and Nigel. And guys, looks like the wait for all-time highs, it'll have to wait. One more day, few more days. But a bit disappointing, right? We had a good start. The Nifty scaled to levels of 26,100, and we've slipped about, 170 points from the day's high, and now closer to 25,900.
I think that's the bigger disappointment. Frankly, I was not in the all-time high camp today. It was 400 points gap up. You had global cues which were a bit iffy. Wall Street was selling off. There's some concerns on India, on US-China trade as well.
And plus Tesla, IBM, when they opened up for trade,
exactly.
after us, these stocks were all down. So that was going to reflect.
Absolutely. Yeah, so I was not really in the camp that fully believed that we'll get that all-time high. But what has been more disappointing is the sell-off from the afternoon high levels. But, maybe it's profit-taking, the market, fear of heights, right? We've all seen that in the past as well when you're approaching critical levels.
Oh, yeah, that's right. I think it's par for the course. After the kind of rally we've seen, it's par for the course. Maybe you wait a little longer and those all-time highs are going to come. But maybe, in fact, after the kind of run, some kind of cool off, some kind of consolidation is par for the course. And today is the Sensex weekly expiry as well. So that could be another element at play. But the headline index is still okay. You look at the breadth of the market. Portfolios are not feeling like anywhere close to that fresh all-time highs. You pull up the zigzag lines. At the start of the trading session, you're close to 1,700 stocks that were advancing. And the number of stocks declining were far lower. Now, let's just take a look at what's happened. So that's why portfolios are not feeling anywhere close to those all-time highs. Though I think we gradually get there. And today, it seems at high levels, there is some supply that's coming in, particularly for the Nifty Bank as well. That's come off considerably.
The small cap index is, by the way, in the red now. The small cap index is down close to about 0.2%. And lots of, stocks with large volumes. There's Adani Power, Eternal, NMDC, many in the banking pack, like an RBL Bank, DCB Bank. Oil marketing companies are sulking today. So there's lots happening beneath the surface, but the big story is that the Nifty slipped about 160 points from the day's high. The Nifty Sensex closer to 400 points, and we're in the green, but just up close to about 0.25%. Here's what's lined up for you on our show today. In the final hours, early gains propelled the Nifty to 26,100 level for the first time since September. However, the Nifty failed to maintain the momentum. IT Pack is doing well, leading from the front. Promoters of IT Bellwether Infosys will not be participating in their largest ever 18,000 crore buyback. Meanwhile, Trump settles the dust over H-1B fees, says students, company transfers and current holders will be exempt. The IT Pack, you can see, enjoying a relief rally. FMCG major Hindustan Unilever reacts to an inline set of numbers. MD and CEO Priya Nair says the company will be obsessed with volume-led revenue growth here on. The stock, though, has come off from the highest point of the day. Oil and gas counters also in the spotlight following fresh sanctions from the US on two key Russian oil companies, Rosneft and Lukoil. Stocks of HPCL, BPCL, Reliance Industries, HOEC, MRPL, all under pressure.
Okay, so that's a packed next 1 hour coming up. Let's kick it off then with the trading strategies. We have Mitesh joining in as always. Mitesh, afternoon. So for the bulls, it is a little disappointing, but you were always in the camp. I remember in the morning also you were saying that if we do get close to all-time highs, then one should be taking some profits. That's exactly what's happening, even without hitting that technical number. What would your advice be for the last hour?
Good afternoon, Surbhi. So I think, rightfully so. The idea is that, see, if you look at the Nifty move, which started on the 1st of October, on the 30th of September, the low was around 24,587 or something. And from there, we have rallied by about nearly 1,600 plus points. So I think, some kind of a pullback, profit booking, especially when you're hitting an important level like all-time high. There is a gap over there which happened when the markets had an all-time high. They after that they fell with a gap, and then there was the highest ever closing. So I think these two are important factors, and we were overbought on the hourly to hourly chart. So it was very likely that some kind of selling might come in as we get closer to those levels. I think that's panning out. For the index traders, I think good that one should look at exiting the index positions and wait for a pullback till about 25,800 to buy into it. And on the stock side also, I think the idea is that you should now take profits on long positions, barring some IT names. And that apart, I think one can also explore some shorting opportunities. So I have one buy and one sell call right now. On the buying side is Colgate Palmolive, which I would recommend buying with a stop at 22.69 for targets of 23.30. And on the selling side is CG Power with a stop at 745.5 for targets of 715.
Okay, Colgate Palmolive, remember, comes out with numbers later today. This is one stock which is 40% lower compared to its 52-week high. Still expensive, 39 times FY27 PE, and it's expected to be a muted quarter. Revenues, according to Mangalam's poll, down 5%. EBITDA margins lower by 50 basis points. PAT down nearly 17%, and there will be an impact, he says, on account of the GST transition. So there will be some impact on the volumes. Volumes could take a hit. So Colgate should be on your radar, even for fundamental reasons. Numbers later today. But let's talk about the oil and gas space then. That's
yeah,
the big
absolutely.
Story, right?
That is the big story, because the US has imposed additional sanctions on Russian oil majors, and that includes names like Rosneft, Lukoil. These entities now will be subject to further sanctions. The question is, will that complicate matters for India with respect to our Russian oil purchases, which the US president anyway has said will, according to him and his understanding on the phone call with Prime Minister Modi, according to him, they will be winding down by the end of the year to almost nothing, quote unquote. Well, let's bring in Sonal to understand the implications for oil refiners, oil marketing and refining companies first up. Sonal?
Well, yes, oil marketing companies are in focus because US has gone ahead and sanctioned two oil producers in Russia, that is Rosneft and Lukoil, and that is done to pressure Moscow to negotiate a peace deal in Ukraine. Now, do remember there were some sanctions that came by from European Union as well last year on these companies. Now, how does it impact oil marketing companies? Do remember that OMCs now may see renewed hassles when it comes to sourcing from Russia in terms of insurance, in terms of freight, in terms of cargo as well. 25% of the total crude imports are from Russia currently. We started it after Russia and Ukraine war that started, and that is the time where discounts in Russian oil were close to $15 to $16 per barrel, but now they've come down massively to $2 per barrel. So the idea that analysts are indicating is that it will not have much impact on the refining margins for these oil marketing companies. And also we had some commentary coming in from these oil marketing companies. For instance, MRPL indicated that they are not trying to slow down Russian oil purchases. On the other hand, a Reuters report suggested that Reliance Industries and HPCL Mittal Energy, they are urgently reviewing documentation and halting orders from Rosneft and Lukoil to comply with these sanctions that came by as well. We spoke to some experts as well. M.K. Surana, who's the ex-CMD of HPCL, he indicated that now we need to see if sanctions will keep Russian barrels out of the market completely. But he did not think so, because China continues to buy Russian crude at current levels as well. And so crude prices will not be impacted in the near term because market is very well supplied. We spoke to ICRA as well today, and they indicated that while refining margins will have a small impact, it will not be much because discounts have narrowed down. Marketing margins will continue to be higher for these companies, and that is the reason we will not see a major impact on profits of all these oil marketing companies. So important to note what happens with supplies going forward, but for now the indication is it will not be a big impact.
Okay, all right. Sonal, thanks for that. Got it. Let's discuss this and more with Deven Choksi. Deven, good to have you in. First of all, wish you a very happy Diwali and a very happy New Year as well to you, your family and all at office. Let's start right there, oil marketing companies, because there are so many moving parts. One, tell us your assessment whether this impacts their buying and the mix of Russian oil, within the refinery. And even otherwise, oil prices have moved up because of this development. And if we eventually have to move away from Russian oil and buy more from the US, it will all play through in terms of refining margins, right? So what is your understanding right now of this?
Yeah, good afternoon, Surbi, and wish you happy Diwali and New Samvat year as well.
Thank you.
Well, I believe that I think against 35-40% kind of an import of Russian crude oil, if we have to pare down this particular import and I think bring down to nothing, that is where probably I think the ask is on the sanction side. It would probably I think mean that I think some of the immediate observations, like today, buying from Russia could possibly mean that around $15 to $25 billion worth of saving for Indian companies because of the discounted price at which they are buying. And at the same time, I think the amount of the cost saving that you do always on the rupee trade settlement for these particular purchases that the companies are doing. As a result of which, I think there is an incremental margin that the companies are obviously enjoying. Suppose if this has to go away, and if the crude oil basket has to be purchased from UAE and other countries, then possibly the advantage of the lower prices might go away for a while, and then probably I think one will have to pay a little premium compared to what it is. But given the kind of buying that India assumes, the power of buying that India assumes, I believe that I think the contracts will be successfully negotiated with I think whoever they're buying from except the spot contracts. And that situation could possibly result into probably I think saving that kind of a vertical cost I think which otherwise I think they were getting from Russian purchases. I believe that I think it is still too early to calculate every impact, but my reading says that I think probably given the size of volume that we are buying as a country from different refiners, I believe that I think we'll be in a much better position to even successfully negotiate rates with some of the suppliers, including from the Gulf region. So let's wait and see. As of now, no immediate impact that we are calculating in the books of any of the refiners, at least at this point of.
Okay, got that. Let's talk about IT because that is in pole position. It's been since morning and still holding up. The Nifty IT index is up 2.5%. With Infosys gaining close to about 4.25%. Now, there are a couple of news flows which the sector is reacting to. For starters, for Infosys, the promoters have said they will not participate in that mega buyback. Promoters have a 13% stake in the company. The buyback is 18,000 crore, a tender buyback at 1,800 rupees per share. So significant upside from current levels. If the promoters don't participate, then the acceptance ratio for the others go up. But the question is, promoters' non-participation, is it because of, they see this as long-term value creation, or is it the tax angle? Because remember, for, and people who are in the highest tax bracket, like say the Infosys promoters, right? The buyback income would be deemed as income and would be taxed at the highest rate. So it's quite tax inefficient. That's what, people are pointing out. So is that the reason why promoters are abstaining? But secondly, there is some clarification coming in on H-1B visa. So remember the Trump administration raised the H-1B visa to 100,000. The clarification that's come through is the F-1 visa. Basically, international students, when they want to move from their F-1 student visa to a working visa, H-1B, not applicable. To even L-1, which is basically doing an intra-company transfer. You're changing jobs, not applicable. And again, this is only applicable it's not applicable for renewals, it's not applicable for extensions. So this clarification on F1, L1 has actually soothed a lot of nerves. And thirdly, remember, as we were discussing last week, the IT earnings was not bad. I mean, it's still a low single-digit kind of a revenue growth, but compared to muted expectations, not bad. And it's not that the demand environment has deteriorated. The companies have done well in terms of margin protection. And this is a sector which is about 20% away from its 52-week high. So, these are just a couple of reasons that's driving the optimism when it comes to IT. Devin, we keep asking you on, IT every time you join us, but anything in the mid-cap IT space, the AI infrastructure plays like a NetWeb, what interests you, even if it's not the large cap names, and how much of a relief is this H-1B clarification to your mind?
I believe that I think the mid-tier IT companies possibly are, I think, among the best situation today, largely because of their contracts are with the OEMs, particularly engineering R&D companies, which we are closely looking at. The contracts are with OEMs, and those contracts are quite tight contracts in a way, from a perspective of, I think, seeing the execution, seeing the deliverables, etc. We believe that I think likes of LTTS, likes of Tata Technologies, these kind of companies possibly I think are giving better visibility as far as their execution is concerned in coming period. Of course, the frontline IT companies, to my mind, I think from the every other aspects have started becoming a reasonably good opportunity from the valuation perspective too. Also, fact that I think these companies have been adapting AI into their core engine and in supply that is outcome based to the customer. Larger contracts are still not fully seen reflected into the books of the companies, I think, as far as the inflow of contract is concerned. But I believe that I think the things are probably can move in the direction of positive only from current levels. So let's wait and see. But I think we are largely leaned towards the engineering R&D space in the IT pack in the mid-tier segment.
All right. Hi, Deven. Good afternoon. Good to see you in. Deven, what's your view on Shriram Finance? The street is quite excited that we could potentially see another deal on Shriram Finance. And, the last few months actually been quite interesting for India's BFSI space. You had the Yes Bank deal, then you had the RBL Bank deal. And now there's a fundraise that's already declared by federal banks. So probably something big happens out there. And the street is hoping that something happens on Shriram Finance as well. At least that's what unconfirmed reports do indicate. Your view on the stock, valuation-wise, it's always had comfort, but at around 710 rupees, Shriram Finance?
So, Nigel, we believe that I think overall the lending space is becoming very, very strong. And those companies which are strengthening their balance sheets, be it NBFC space or be it banking space per se, I think are the ones who are likely to take the biggest advantage of the coming times because we see the offtake, which is at a smarter level. Already we are seeing, I think, good traction into the housing finance. We are seeing good traction into the retail consumer lending loans. They are actually, I think, moving fast compared to MSME loans. But we believe that, I think, given the kind of spending that the government is doing in the economy, it's a matter of time that MSME loans starts picking up. And probably, I think, we could see the larger amount of benefit going to those companies which are in a position to supply high growth. Maybe due to consolidation in PSB at some point of time, I think that is also going to be a reality. So in our viewpoint, I think, though I would refrain from putting any view on Shriram Finance because we don't have it under coverage. In our viewpoint, in general, I think the lending space looks reasonably okay. Also, given the fact that the valuations are quite decent at this point of time.
Okay. That's Shriram Finance. Since we're talking financials, Devin, pretty interesting moves. There is RBL Bank, Federal. We will know the contours of some sort of a deal maybe tomorrow, their fundraising exercise. So there's a lot of spark in Tier 2 financials in general. But then the big banks, the ones that have reported so far, they've been very steady as well. So give us, say, your top 3 financial picks across banks and NBFCs. What would be the order of preference?
So we continue to like, I think, the proposition in Geo Credit, and we also continue to like, I think, a good, strong ability of Bajaj Housing Finance to execute the housing finance business. Comparatively, what we are seeing that these two companies possibly are growing faster than their peers in the industry, largely due to the use of fintech at the front. They are in a position to process loan faster. They are much better positioned to, I think, manage their liability side efficiently and in turn, I think, manage the profits and the profitability. So we like, I think, the abilities of these two companies, particularly within this space. Of course, Bajaj Finance, I think, in the consumer lending space, I think, is unbeatable as far as, I think, their ability to reach out to customer at the speed. We believe that, I think, these two guys are basically joining this entire thing, and maybe we are likely to see a higher amount of growth coming from them. As of now, I think they are available at slightly expensive valuation, but if one is looking at deep value over a period of time, I think they are reasonably good prospects for having in the investment portfolios.
Devin, would you play any of the textiles or the shrimp players? For instance, the Gokuldas exports. We treat it as a barometer to gauge the interest in India, to gauge the progress in India-US trade deal. But that's a stock which is still down 26% so far this year. Would you bet on any textile shrimp plays? Because at some point, perhaps this trade deal is going to be struck between India and US, and then these would be the beneficiaries. If yes, which stock?
So I think for a policy arbitrage kind of a reason, if you want to play, I think that's perfectly all right, because I think the downside is possibly covered in the price. Maybe I think we are going to see the affected result in the second quarter for some of the textile players. But I think if the policy has to turn a little favorable, given the kind of hopes that we have for the month of November, in which I think they're likely to settle in favor probably, then in such situation, I think you might see a jump despite of, I think, some of the weak performance that we might experience in the second quarter. As of now, we don't have any choice right now to add into the portfolio. So frankly, I think we stay away from it.
Okay. All right, Devin, we will leave it on that note. Thank you so much for joining us this afternoon. It's been good having you on the show. Well, with that, we do have to take a very quick break. Let's look at the market. The market's still managing about 110-point up moves. The Nifty is not giving up. You can see there is buying at lower levels coming in as well, which is a good sign. We'll take that break, come back on the other side, and we'll have Dinshaw Irani joining in for some perspective as well from Helios. Back with that in just a bit.
Welcome back. Well, markets, we saw intraday dip, but actually some of the stocks did get bought into. I think SCI is a stock from the broader markets actually that's seen a bit of a spike up. So I think let's get that one up. From the word go itself, there was buying interest, but now we've seen that one move up. And I think Central Bank is the other bank that's moved up, some of the notable movers from the broader markets. But let me leave that list to Hormuz, who's joining in as always. He's turning the spotlight on the big movers and the shakers. Hormuz.
There were two themes that were supposed to be in focus with all these trade-related developments. The textile stocks are in the spotlight back again after some optimism. And you look at the volumes that they have had today. The Vardhman Textiles, of course, it reported results as well just a few minutes ago. They had close to 1.5 crore shares that have been traded on Vardhman Textiles. The 20-day average is only 1 lakh at this time of the day. KPR Mills also 10 times its 20-day average, and Gokaldas as well. Among the first names that come to mind when you talk of textile names, again 10x in comparison to its 20-day average. Of course, had to talk about Infosys today. This third straight day of gains now is the 4.5% higher among the top Nifty movers today. But on this, the stock has gained every single day this week, but had declined every single day last week. And today's session, we have had close to 1.5 crore shares that have been traded, which is 3 times its 20-day average, which is around about 50 lakh shares. And the stock has moved above its 100-day moving average, which is at 1527. The next level on the upside is slightly higher at 200 DMA, which comes up to around levels of 1600. And courtesy of this 3-day advance, the stock has turned positive for the month of October. Might just well turn out to be the first monthly gain that Infosys sees after 3 months of losses. Bulgaria Industries is another name. Of course, it is a specialty chemicals company. At 15% higher, the biggest single-day gain and the highest volumes already since August of last year, beg your pardon. 28% now the stock has moved in the last 3 trading sessions itself. And we have had close to 60 lakh shares that have changed hands. The 20-day average here is just about 4 lakh shares. And the stock moves above all of its key moving averages as well. And courtesy of this move, the October month is turning out to be the best one that the stock has had this year. And lastly, Pokarna is among the list of the gainers today in the broader markets, 12% higher on this stock as well. It's gained in 4 out of the last 5 sessions. A similar move in the last 5 sessions as Bulgaria had seen. They've had over 22.5 lakh shares that have been traded. The 20-day average is just a lakh. And the next level to watch on the upside is the 100-day moving average, which is at 931. Been an underperformer this year. Pokarna is down 23% so far, but had doubled or more than doubled actually in the month of 2024.
Okay, all right, Harmaz, thank you very much for that. So lots of action, buzzing stocks as always. Appreciate you joining in. Well, let's welcome in Dinshaw Irani, CEO of Helios Mutual Fund. Dinshaw, glad to have you with us. Season's greetings. Hope you had a cracker of a Diwali and are all set for a great new year. So tell us, I mean, today was supposed to be all-time high day, but we are waiting. Maybe next couple of sessions. But really, market really tested our patience in the last 1 year. Now, what about this year? What does your gut feeling tell you?
Thank you, Surbhi, for having me on your show, and a very good afternoon to you and your viewers. Yes, I did have a cracker of a Diwali, and thankfully, I mean, the way the US markets behaved during that 2 days of break that India has been through were pretty decent. So that's why we weren't worried about how India will open as such. And obviously the GIFT Nifty had its own way of showing us that things are going to be good. That was the back of the news that, not news, rather it was a rumor that probably the deal will go through on 26th and 28th when the ASEAN summit happens. So let's see how that goes. So I think basically now, last 1 year has been, I mean, Diwali, this Diwali to the last Diwali, it has been a spate of bad news, right? I mean, you saw earnings growth declining. In fact, you saw negative earnings growth at some point in time. You saw the valuation hitting an all-time high thanks to the falling earnings and the prices remaining firm. And then you obviously saw the spate of volleys from the US on the tariff front. So it was obviously fairly bad news coming in. But however, I think we did a lovely job, a fantastic job in the sense I'm talking about the government, the RBI, the way they went about infusing, the RBI in its part, infusing liquidity and cutting down rates, interest rates, making it money cheaper, rather more liquidity and less to pay for it. And secondly, the way the government went about it, I mean, increasing our tax slabs, the tax exemption slabs from 7 to 12 lakhs. And then obviously the GST salvo with the Prime Minister delivered from the ramparts of Freight Fort on 15th of August. I think that was probably what was needed by the consumer. So once the implementation happened on 22nd September, that's when the real consumption kicker came in as such. And I think this quarter, whatever growth is being reported is because of the last 1 week, mind you, because 1.5 weeks, 1.5 months literally were lost because of the pre-announcement and the postponement of demand. So I think the actual demand will come in this particular quarter, which is the December quarter. And hopefully you'll see double-digit earnings growth coming back in. Earnings, I mean, the P's are already at fairly low levels at around 20-odd levels, which is the last 10 to 15-year averages that we're talking about. Our underperformance vis-a-vis the MSCI EM index has been at historic levels. So obviously one will see that also getting reversed to an extent. So all in all, what I'm saying is worst of the news is over. One can only see now positives kicking in, and hopefully things will reverse for us this year as such.
All right. Hi, Dinshaw. Good afternoon. Good to see you, Ben. Hopefully the party starts in Diwali and doesn't end till the end of the year. So Christmas drinks on you later this year. Look forward to that. Dinshaw, let's talk about a couple of stocks and sectors that you all have been positive on. Ola Electric, that was something that you all loaded up considerably. The stock had a good run. I think the last report, though, I read, I think you lightened some part of the positions are there. Explain to us, what's the stance on Ola Electric?
So no, Nigel, actually, not only Ola, we had Ather also. By the way, Ather's done far better than Ola for us. But somehow people stuck onto Ola as such. But I think basically because it was, bought at the right time. And fortunately for us, the stock ran up so sharply within like a couple of weeks that we thought of lightening our positions. We didn't exit from Ola, neither are we doing it. In fact, in our mid-cap fund, whenever the opportunity arises, we keep adding to it bit by bit. But we lightened it at 70s odd levels, I believe. I have to check with my fund management team, but I think that's somewhere there that they trimmed their positions a bit. But otherwise, we are fully into both the stocks, not only Ola, but also Ather. And yeah, I mean, and actually, as I say, that it's not a two-wheeler company, it's actually a tech company. And that's what Ola has been doing all along, right? I mean, coming out with new technologies and introducing them even in the non-two-wheeler space. So that way, we're very comfortable with our positions.
Okay. All right. Just one more clarification, Dinshaw, I wanted. Thanks for clearing that point out. So you continue to remain in a positive stance on both Ola as well as Ather. And as you're saying, they're not two-wheelers. They're actually a technology-based company as well. So take that point on board. What about Eternal? That's another company that you all have been quite positive on. Now, over the last few days, you're reading various articles that the big boy Reliance Industries is getting a little bit more aggressive in this space. And I don't know whether that's playing on the minds or whether the run-up has been so drastic, but Eternal is one of the top losers in today's trading session. Right. You all have been in early. You all have backed that position. Eternal still has a long way to go from here as well?
Yeah, actually, Nigel, I don't know, Sam Altman had come out with a statement that trust the exponential. I think that applies to all the platform companies, not only Eternal as such, where you don't know what kind of a multiples of growth that's going to apply to these kind of counters. And frankly, I mean, the market's big enough for all players. I mean, I don't think Eternal and probably Swiggy and Zepto, in fact, the three major players today in the quick commerce space could have justified such a huge market. So there's enough and more to go. Yeah, there'll be knee-jerk reactions along the way. There'll be some question marks being raised as such. But I believe that the players who are still, the players who are generating money and not borrowing from outside to grow are the ones which will grow. I mean, there's one player who's constantly in the market for raising capital and investing. Unfortunately, it's an unlisted play, so not many own it as such. But that is not the right way to go, right? I mean, these guys have been there, they've done it, and they're making money on their food delivery business platform as such. And there are other platforms also with their offer. So I don't think they will have a problem facing the likes of a Reliance or even a Amazon as such. I think the market is big enough for this. So we continue to hold and we're quite okay. I mean, we're quite happy with our position. So obviously there'll be days like today when you'll see some hit being happening, but I'm sure there are less days like this and more of upsides to come. So,
sorry, which is that company you said in the market, privately listed, constantly looking to raise money? Zepto.
Yeah, obviously.
All right. No, I wasn't sure whether you're referring to the quick commerce space or anything else in the internet platform, which is why I thought I'll. So you're comfortable buying, the Eternals and even Urban Company, Indegene. You've spoken about them in the past at the current juncture too, even at these levels.
So Urban Company, we are holding on. We were anchors, and it opened quite sharply up. I mean, 70% up. Even today, it is like 55% higher than its listing price. We're not too keen on that right now. Probably wait it out and see if the price comes to some reasonable levels before taking a position in that. But today, we're not adding to that position. We're just holding on to our anchor position.
And Dinshaw, finally, financials, a space which you've always loved for a long, long time. But, what are the new ideas there? Because you're really spoiled for choice. There are the big banks, there are the non-banks. Then the small banks are being bought over by international giants and there's capital flowing. There's too much going on. So any new ideas here?
No, so this is a very well discovered sector. There's nothing new happening out here. But what we did, however, was with RBI becoming so aggressive on the rate cuts. What we did was shift some of the positions from, rather trim some of the big banks and went into NBFCs as such, because we believe that those will be the better players to standing there to take care of the rate cuts, such aggressive rate cuts. And I think we've been proven right. Otherwise, we are holding on to our original positions and we remain quite into the sector. And as I said, that if economy is going to grow, this sector is bound to do far better than any other plays in the market. So.
Thank you very much for that. Now, the big number to watch will be Kotak Mahindra Bank. And I think that comes out on Saturday. Dinshaw, great chatting with you as always. It's time now to talk about futures and options. Nigel has hopped over to the F&O desk. Nigel.
Well, interesting day's trade, right? Because we were all expecting the markets to end closer to the higher point of the day, but there is some supply that's coming in from the top. And the PCI, the last time I checked, was at around 1. Now, a couple of strikes are very, very active, and that's giving us a perfect picture why we did see selling from the highs of the day. So the 26,100 call, a lot of open interest built up out there. The premium out there went from around 40 rupees, it went all the way to around 100 rupees. But from the top, actually, it's come down to around 73 rupees approximately. But the rough average will be around 100 rupees approximately. So we are seeing that there is some kind of mixed activity on the call side. On the put side, though, the 26,000 put, just take a look at the premium. At the end of trading session yesterday, it was at around 200 rupees, the last trading session. That's come down to close to around 100 rupees. There's a sense of writing at this particular strike. So at around 26,000 put, you deduct 200 rupees, which was the start of trade premium. Then you're looking at a near-term support of around 25,800. That's the ballpark mark out there. On the upside, 26,100, that's a bit of a resistance zone. And that coincides with today's high, which is at around 26,104 or thereabouts. Looking at individual stocks, a couple of those names that have got hit and have underperformed, they're coming for a short covering bounce. So whether you look at Vodafone Idea, stock is surging up, open interest is down. Should get the futures played up for you on the screen. There's a bit of a short covering bounce out there. IEX as well, the stock has popped up in trade, and there's a massive shedding even on that particular name. On the flip side, Eternal, the stock, after seeing a good run, the stock is one of the top losers today, and the open interest actually has swelled up on that particular name. And finally, Axis Bank, when they came out with that set of numbers, you could have looked at the numbers and said, well, you didn't like this or that. But post the numbers, the street is clearly telling you it wants to look ahead, because that's one of the outperforming banks. So fresh buying being seen out there. Stock up, open interest up as well. Looking good for more.
Okay, all right, got it. Nigel, thank you very much for that. We'll take a break on that note, come back on the other side. As always, a check on all the dealing room chatter of the day. So we'll have Nimesh join in, and then some final trading ideas coming up with Mitesh.
Welcome back. Keep an eye out on the bottom of your screen. You're getting Laurus Laboratories numbers that are coming there. The EBITDA number actually, comes up for you. It's at around 400 crores, which compares with around 178 crores. So on a year-to-year basis, that's a big beat out there. In comparison to our poll was at around 368 crores. So the number, in fact, is better out there. On the top line as well, I think the number is in excess of around 1,650 crores. Our poll was at around 1,550 crores or thereabouts. I think that was the number we were working with. So Laurus Laboratories, actually, those numbers have started looking good. After a few quarters of disappointment, I recall the stock hovering in the 300 to 400 rupee range, and the margins weren't coming about. But if you look at it for the last few quarters, so the March quarter, the June quarter, and now the September quarter, margins are holding about the 24%, and the street likes that. So Laurus Laboratories, first look at it, a stock that's already rallied is a 100 crore beat on the top line. The EBITDA number as well, absolute number, is a beat of close to around 7% or thereabouts in comparison to our poll. And the profit number as well at around 195 crores, much better than what we're working with. So for the time being, thumbs up. Keep in mind though, the stock has seen a big run in the last few months. That said, as promised, around 3 p.m, we have Nimesh who joins in to tell us what is he picking up in D-Street Chatter. Nimesh, dealing rooms are buzzing or a lot of people on holiday?
Not really. Seems like the attendance is coming back after 2 days of holidays, Nigel. But as we speak, the mid-cap index has turned into the red, and there is now clear signs of profit booking. So after the gap up, there were indications that maybe you'll see today will be a day of profit booking, and that's exactly playing out. Whether it's large cap, whether it's Nifty Bank, or for that matter, the mid-cap index as well. Even in Nifty Bank, it's off days high, essential on back of profit booking. But within that, at least there is some sense of buying interest from the domestic funds into private sector bank stocks. Remember, that's one space which is buzzing off late because of a lot of deals and expected deals as well. So that's one space where there is a bit of buying interest for sure. From a flow perspective, I understand there could be some sell-figure from the FIs today. So watch out for that number in today's market. And again, the one space which is done well today is in anticipation of the US tariff deal is the export-facing sector. So pharma, autos, textile, all are buzzing on hope of that deal coming soon. So that's one space which has done well. But broadly, I guess today is a day of some bit of profit booking after the big gap up that we saw in the early morning trade.
Okay, all right, Nimesh. And the good news is that India's picked up the third wicket as well. So 109 for 3 as you went through that chatter. Let's see by the time you end with some of those stocks, whether we get one more in the bag. Tell us, what are the stocks on your radar?
So in terms of individual names, Nigel, the first is a couple of stocks where there is delivery-based buying today. Selling today. Fortis Healthcare as well as Max Financials. Both stocks are going to see delivery-based selling. So watch out for the delivery data by end of the day. So that's for first couple of stocks. Second, where I'm expecting some large blocks coming very soon. FedFina as well as Niva Bupa. Both are expected to see large block deals very soon. One large private equity investor is a common holder there, and they are likely to sell out because the fund is likely to see a closure. So that's the reason why you could expect large blocks there. The third name is GMR Airports. That's been buzzing in trade today. I guess the volumes also picked up. A bit of fresh interest from larger HNIs is what I understand in GMR Airports. And of course, there are some developments as well with regards to the Nagpur Airport and the Delhi Airport. So maybe that's the trigger for GMR Airports. And the last is M&M as well as Tata Motors. Within the auto names, these two stands out in terms of delivery-based buying today. So while both are buzzing in trade, especially for M&M, I understand one leading long-only fund, I understand an active buyer, hence you'll expect delivery buying in both those names today.
Okay, all right, got it. Nimesh, thanks very much for that. So plenty of action and interesting buzzers as always on Nimesh's list. With that, let's get back to Mitesh now for some final trading calls. Mitesh, tell us your stocks and also maybe a word on some of these oil marketing and refining companies, because as we are getting to the end of the day, there is some pressure, 2-3% lower on HPCL, BPCL, IOC, all of them.
Yeah, that's right. I think, the market, in fact, if you look at it, has kind of given up all the gains, and that's not a very positive sign. So I think, as I said, the profit booking thing will come in, and we were looking at 25,800 as the possible entry point. That still remains a support area. But let's see if we, might go slightly lower than that. And on the stock side, the STVT on HDFC AMC with a stop at about 56.25. Look for a target of roughly around 55.70 or thereabouts. And the other stock is Hindustan Zinc. It's been correcting and might decline a little bit more given the fact that some sell signals have come on the hourly into hourly charts. So we'll take a tight stop at about 487.5. Look for targets of 475.
Okay, all right, Midesh, and good call today. I think you, from the word go itself, you said be careful. This gap up, could be used as an opportunity to lighten some positions. So good call on that, Midesh. Well, let's move on to the big number then. FMCG giant HUL came out with the second quarter numbers. Mangalam asked the management about the company's aim to increase volume-led growth. He also quizzed them on their near-term and long-term expectations for the company's growth and whether they were on track to meet those goals set out. Let's hear what they had to say.
Obsessed with volume-led revenue growth. This will be our focus, our obsession. There are 4 pillars we will focus on as a strategy in the future. The first is that we will segment radically our consumer segments in India. There are distinct consumer cohorts emerging in India. We have a unique opportunity to serve all these emerging segments in India. We will future fit our marketing and sales frontline machinery. Our marketing will become much more social first demand generation, and we will invest in ensuring that we are investing behind quick commerce and e-commerce. We will radically transform our core brands, making them more modern, youthful, contemporary. This will be our focus. This, along with investing disproportionately behind a few high growth segments to scale them and make markets in India, will be our priority and our focus. So really simply, volume-led revenue growth is what you should hope for in the future from us.
40% of the business was benefited from GST rate change. There is, of course, a short-term transition impact which we spoke about, and hence categories like hair care, skin cleansing, they saw the impact coming in. 20% business, which is, let me say, skin care, tea, there was no change in GST. We saw these businesses growing in high single digit, also supported by volume growth within this growth. Third, last 40% business is our home care business, where we saw a mid-single digit volume growth on the back of a strong high single digit volume growth in the base. Overall, this volume growth was muted, and we had a flat growth of USG because of the price declines. Today, commodity headline crude is almost 10% lower year on year. Plus the competitive actions we took, which we spoke about it earlier, put together had a negative impact of pricing on home care. So this is how the 2% growth for the quarter has come out. Clearly, once things stabilize early November, there are multiple prices in the market, old MRP, new MRP. Of course, with all the amount of support that we have given, this will stabilize in the market. We do expect that typically for FMCG business, 2 things are important. The net overall disposable income, which consumers have, and the consumer sentiment. GST will end up supporting both of them. So we do believe that we will start seeing a recovery of volumes going ahead.
Okay, so that was commentary coming in from Hindustan Unilever that they will double down on volume growth going forward, looking at a better second half in all probability. Let's take a break on that note, come back on the other side, and we'll have some final stock ideas for you. In the meantime, listen in to some expert opinion and that came in on sectors or themes that they're betting on in the new Samvad.
The last 4 years have been led by the public sector stocks. And we continue to be bullish on that sector because what has happened for the first time after many, many years is that rather than private enterprise leading the sector up, it's government-owned capitalism, whether it's in America with Donald Trump directing investment, whether it's in China or whether it's in Japan. I think the government's capex is now leading edge of the boom in India. We are finding opportunities, say, in the shipbuilding sector, where the government has made very loud noises that India should be building more ships. That means capex, and that means a great boom ahead for the Indian shipbuilding industry. I think there's a lot of clamor for rare earths now in the world. Everyone has realized the importance of rare earths. So my feeling is that the government is going to direct a lot of capex in some PSUs to explore and process rare earths.
I feel insurance is another very important thing. I think after GST, the kind of impact that you'll have and the kind of numbers that you have, I have a feeling insurance would play out very the play. Consumer finance, again, I feel that this whole GST cut, etc. I mean, consumer finance is a very sweet spot because, you have the discretionary consumption play, hopefully reviving, fingers crossed on that. Plus you have the financial play. So I would actually play these small themes. They may not be in your large, big banks, but this would be more in the mid-cap kind of space. And I have a feeling that you could actually have some very big rocket moves out there.
We've been owning IDFC First Bank for some time, and I think clearly it looks like that, I think from the management's most recent commentary, that the worst is behind for them, and clearly better days lie ahead over the next few years. They've essentially, I think, also had a fair bit of funding coming in from two big marquee global investors. So I think even from a cap raise, they seem to be sorted. It's now all about execution, execution, and execution. The other is we've been liking that is essentially a payment bank out there, which essentially has been waiting for an approval from the RBI. The Fino payment bank. That's the second one we've been. We own Paytm as well. It's possible that they're probably today in the quick commerce side, the revenues are around 40-50,000 crores. I probably think the bull market in them will continue as long as probably they get to 3 lakh crore, 5 lakh crore in terms of revenues.
Welcome back. Let's get you the latest on what's happening in the Tata Group, continuing the focus on the ongoing differences within the Tata Trust over the control of Tata Sons. Sources say that after Venu Srinivasan's reappointment as trustee for life, Meli Mistry, the director of the Meher Palonji Group, has set an unprecedented condition before approving the reappointment of Srinivasan. The move comes just ahead of 28th of October when Mistry's term as trustee comes to an end. Could this be a move to secure his reappointment amidst the differences in the group? Parikshit now joins in with more.
Well, yes, this is a move that has caught some of the trustees in Tata Trust by surprise. Just ahead of Venu Srinivasan's reappointment process, Meli Mistry, who is the director of the Meher Palonji Group and a member of the Tata Trust himself, he wrote a letter to all the trustees saying that his approval for Venu Srinivasan's reappointment is conditional to the fact that in future, the reappointment of all the trustees would take place unanimously and they'll all be reappointment for life. And if in future anybody changed their stand or did not give support to another trustee, then Meli Mistry would withdraw his support. So this is something that many believe is unprecedented, because there is no clause which actually allows you to withdraw support retrospectively and also say that your support will be conditional. Having said that, this could be possibly seen as a move by Meli Mistry to somehow guarantee his reappointment amidst differences. We've seen differences within the Tata trustees. about how Tata Sons should function, how it should operate, how the agenda should be approved, whether Tata Sons should be listed or not. So all those tensions have been boiling over the past few days. Clearly, those tensions haven't ended. Having said that, let's see what happens in the days to come. The reappointment process of Mehli Mistry will begin very soon. His term expires on October 28, and before that, he has to be unanimously reappointed by all the trustees. The members of the Sir Dorabji Tata Trust include Noel Tata, Venu Srinivasan, Vijay Singh, Pramit Javeri, Mehli Mistry, Darius Kambata, and these are the people who have to approve the reappointment of Mehli Mistry as well.
Thank you very much for that. By the way, the mid-cap index is also in the red. The Nifty's gains now stand at just about 15 odd points. So it's paring gains very rapidly. From the day's high, it's a fall of more than 200 points. And just look at that graph starting 3 o'clock. Remember, today is also the weekly expiry and markets are selling off quite rapidly. The Sensex also now just up about 100 odd points. It slipped 750 points from the day's high. Individual names, if you look at that in the large cap screen, in the last hour, Bharti Airtel, Ultratech Cement, Bajaj Auto has extended the loss to about 1%, Jio Financial, Asian Paints and Reliance Industries. That's been a bit of a drag as it slips close to about 1.25%. Mitesh is now joining in. Mitesh, what would you make of this sell-off that we are currently seeing? Just profit booking, or is there more correction in store?
To me, I think, at the initial phase, looks like profit booking mode. We are still above the hourly averages. We are still above the 2 hourly averages. So it looks like a pullback to them, but it could be a slightly deeper one. One, because the indicators were overbought. Two, I think we had run away too far from these averages. My first level is around 25,800, 25,780. I think that's the first support area. Let's see if we can hold on to that. In case not, then I think the correction could be the pullback could be slightly deeper to about 25,600. But these are the two levels which I'm watching for.
All right. KPI Green as a stock actually should come up for you on the screen. I'm not sure whether, we have spotted that. Not a stock we track too often, but KPI Green, after seeing a sharp correction in the last few months, that one's moving high on very good volumes actually. Mitesh, any view on this? How's it looking on the charts? If I remember correctly, I think the stock is still 10-15% away from its 52-week highs.
I think the last 2 weeks of rally has turned the medium-term charts very positive over here. The first target is around 533 to about 540, 541 is what I'm looking at. But good chance that once we clear those levels, the stock could target 600 plus levels. So the structure is good. For somebody who wants to enter afresh with this kind of run-up, I think a pullback, or like today we had an intraday decline to about 493 odd levels. I think a pullback to about 490 is what I would recommend as an entry point, and keep a stop below 475.
Thank you very much for joining in. Mayuresh Joshi is also now joining in from William O'Neill for the last leg of the markets. Mayuresh, first quick thoughts on HUL, Laurus Laboratories. These two stocks are reacting to their numbers. What's the call analysis at William O'Neill?
Afternoon, Riva. I think two things. One, I think the commentary that HUL probably gave out in terms of the coming few quarters, where there is going to be a very aggressive volume-led growth, and that will be backed by pricing. I think that sounds very, very positive, because I think input costs have largely moderated. As you see from Nestle's con call as well, I think a lot of input cost inflation is largely behind us. Palm oil probably seems to be some sore point as we speak. But overall, I think even for HUL's premiumization portfolio, and even the 40% portfolio which will come in the 5% bracket, I think volume growth might be something which will come back very, very strongly in terms of the dealer and distribution network that they've got. So I think good set of numbers by both Nestle. Expectations from FMCG probably remains high. So remain optimistic on Nestle, HUL, Marico from the FMCG space. As far as it comes to the pharma space, our own take is that Laurus DVs are expected to continue doing well. I think you've already seen some initial signs in the previous quarter in terms of numbers coming through. With the expectations of the Biosecurity Act in the avatar that it probably goes through. Our own sense is that DVs, at least at this juncture, are a tad bit better placed than Laurus as we speak. The CAPEX is largely done with. The incremental CAPEX will only add to numbers going forward. The nutraceutical business, the expectation in terms of the CMS business, expected to continue doing well. And therefore, I think within the two, I think DVs in terms of rating, ranking, institution holding as per CAPEX. tad bit better.
All right, so you're positive on Loris even from here.
Yes, I think positive on both, Nigel, but I think DV's, again, as I said, a tad bit better place than Loris at this point.
Got it. All right. Any view on Godfrey Phillips? The stock is down in today's trading session. Philip Morris, their commentary on Indian cigarette industry itself, I think they said the industry has grown at around 9%, which wasn't such a bad outcome, but the street, I don't know, is reading it not too well. Godfrey Phillips, in fact, is down 5%. Your view on Godfrey Phillips or, the largest play, ITC?
No, so I think don't have Godfrey in the coverage, but again, I think ITC specifically in terms of expectations going forward, specifically from that cigarette business, I think it should continue to have a very stable show going forward, Nigel. And the other businesses that ITC probably has, the other FMCG business expected to pick up steam. I was just mentioning FMCG companies as well. ITC will not be left behind. The agri portion also should come back reasonably strong as we head into the next few quarters. And therefore, I think a mix of the sectoral contribution that ITC probably has. Obviously, cigarettes still remains the generator in terms of cash cows, and more products expected to come through from ITC's product suite in the next few quarters might actually bode well. In that interim, again, if the new product launches, there might be some additional upfront cost, additional depreciation that can come through. But I think cash flows might still remain strong for the core cigarette business and the other businesses. Although I think ITC, in our opinion, again, leadership stock, something that we've got in our coverage, which might continue to do well in the next few years.
Okay, all right. Mayuresh, thanks a lot for joining in. Got you on a bit of a scratchy line, but I'll tell you what, the markets are going to be ending way off the highs. Though, in fact, Team India as well, I think we're in desperate need of a wicket. 130 runs Australia is for the loss of 3 wickets or thereabouts. But the stock, I think, of the last 30 minutes is Loris Laboratory. And this commentary that's coming in is very, very good, besides the good growth that we've seen on the top line margins as well as on the profitability. The revenue drivers, they said, continued robust CDMO industry outlook. On margins, they're saying the underlying EBITDA margins are expected to be higher. And the generics growth is supported by the CMO opportunities and the stable ARV business. So those three statements have been read positively. The stock initially was holding at around 930. It's moved up post the numbers and post the commentary that our ticker team had put out for you. Well, let's wrap down the markets then. It was a bit of an anticlimax actually that played out today. Last couple of trading sessions, Street was bracing for a 200-point bump up. We got that. Unfortunately, we lost our way towards the end of trade. What didn't do well today? Eternal was under pressure. The two new entrants into the Nifty, Eternal as well as Interglobe, both of them were down close on 2 to around 3%. Eicher Motors as well was down close to around 2%. On the flip side, tech was the one that was holding one end up. So Infosys, promoters not going to be participating in the buyback. Big move out there. Wipro as well did well in today's trading session. HCL Tech as well as TCS. There is a lot of interest from foreign investors into the the BFSI space, and you had a couple of the stocks that did well. You had Shriram Finance, some buzz out there that there could be a deal in the works. That one goes home with gains of around 2%. And ONGC, the pop that we saw in crude oil prices seems to have a positive rub-off. And that's why that stock as well did pretty well.
But outside of that, the oil and gas index closed with a cut of close to about 0.6%. Oil marketing companies extending the decline towards the end of trade. Remember, higher crude oil prices threatened the margins for oil marketing companies, and Reliance Industries too had a bit of a late slide. There were reports which said that Indian refiners are perhaps reviewing the Russian oil contracts after US sanctions. So oil and gas on the way down, on the way up, it was IT, but a flat close for all the key indices. Sensex, Nifty erasing their intraday gains. So in that sense, a tad bit disappointing.
But broader markets, plenty of winners in today's trading session. EPAC, Prefab came out with a set of numbers. Stock went home with gains of around 13%. So you picked and choose the right stock, you'd make a lot of money. The other one that did pretty well in today's trading session was Jain Resource, again a newly listed company. That one was up more than 3.5%. SCI was the one that was leading the way. That was up close to around 7%. And another big volume mover was Welspun Living as well as Gokuldas. Hopefully, we get a positive outcome that's going to be coming in from India as well as United States trade talks. So Welspun Living as well as Gokuldas exports up and about in today's trading session. But we'll call time on this edition of Closing Bell. Stay with us. Markets Forward comes up next.